Good evening, everybody. At least it's evening here in Denmark, my time. I hope you had a great day. Today, the Twitter recap. Let's go into the charting. First, if you like what I do, give me a lovely subscription or follow on Twitter, subscription on YouTube, and also leave the comments below if you agree or disagree with any of the charts that I've shown. I happily appreciate it. And this is actually my third trial to get this thing done right. The past two, I messed up the intro and then the charting, and it was a mess. So third time, maybe it's a charm today. Also, I'm getting Borak trading channels on the show in like 3/4 of an hour, where we will discuss oil, platinum, gold and silver, uranium, the big one, and the Nasdaq and the SPX, and why he thinks that we are going above all-time highs in this move up here, which I don't think so, but I'm happily want to hear what he says because I value his opinion a lot on charting. So I'm excited, so should you be. And yeah, let's dig right into the stuff. Here's Andy finding value finance, silver. I wouldn't get caught sleeping on silver here. It looks prime to go if yields allow it. Also, if the dollar allows it, but yields and dollar are highly correlated to each other. Again, I agree. The $20 silver level, once we break that, it is good to go on the way to 50. Maybe a tad below, depending on how you measure this pole. Anyways, I like it. I like it a lot. Lawrence here. This picture should be sobering to anyone convinced that we have reached or retained price stability. So basically what he has done here is overlaid the current inflation cycle together with the cycle in the 70s, and it's almost perfection. So if this is true, then we have 2 years of high inflation. Well, somewhat high inflation. 3% is very high. Before we go up again to maybe double digits. I don't know. What do you think? This is one of the biggest question marks that I have right now. Is this really a repeat? I think it is, to be honest. That's if I were to guess. Also, a lot of the charting that I have done, I think indicates that that's where we're going. We need to inflate our way, all the debt that we have, or the government needs to. But yeah, it certainly looks scary if you are a normal person like me. Okay, this Nick Galley mortgage application just plummeted to the lowest level since 1995, down 50% from the pandemic highs. Not good. Sellers will need to reduce the price to bring buyers back in. And you can see here we are down at the lows here from the global financial crisis. Also the lows back in, I think there were some sort of recession at the early 90s. But we are at this cluster here and the lows. I will point out though, you can see here the collapse, the bull trap, and then woof. Same here, the collapse, the bull trap, the push. So I think maybe we're going lower. I don't know, but if we start to go sideways, I think this one here could be a low at the $50 at the 50% level retracement or pullback. Again, it certainly looks scary. Again, I don't know exactly when the housing market collapsed. It did back in. Actually, the housing market collapsed in 08, I think, right? 09. So it was around here. And we are maybe on the way down here, or we're flattening out. I don't know, but it certainly is interesting to me. Trend spider. A simple trend line here actually speaks more volume than anything else. He also has a moving average here, the 50. So we broke down here, bear flag into the trend line, the 50 moving average, and we're breaking down here. This is on the daily candle. This is some days ago. Actually, it's not. It's yesterday. My bad. This is very, very bearish outlook, and you could argue that you are working on a head and shoulders with the neckline coming across right there. So, very bearish outlook for what's it called? Yeah, the SPY or the SP 500. Next one is Chris Kimball. Silver breakout coming, Fibonacci price targets to be considered. Look at this one here. This is the squeeze that we've been looking at many times as well. The fib levels, again, the $50 level upon the breakout. Yes, I agree. And then you have the the targets up here as well. The 80s, and then just a tad above 100, which is on the nominal scale, the regular scale. It's the height of this cup here. Then you get to 100. So maybe you get a bit of an overshoot to the upside once this break, the $50 break. Entirely possible. Entirely possible. It will not happen tomorrow, I can assure you that, but it will happen in my view. That's how I see things. Sahara again. I love Sahara. He does great charting always. I like to see what he does. So SPX, SPY, the back test of the channel. You can see right here. We just looked at it previously, giving us the inverse head and shoulders plot. This is one day earlier, so that we haven't had this big nasty daily candle. Again, the channel inverted head and shoulders like we looked at, neckline right down there. I agree. JC Parrot here again. When you hear the words overhead supply, this is what that means. Here are some of the world's most important groups of stocks. So semiconductors, SMH, double top, possibly big double top. We'll see how it reacts. But this is a very, you see that more or less all the time. You know, you get it to the previous highs, and then you retrace kind of big. Home builders, XHB, excuse me, again, similar. You can see the double top right there. Industrial, XLI, again, we have the overhead supply right now. It's barely hanging in there, but you can see the exact same thing or the similar thing. Technology, XLK, again, getting back to the previous high always makes people short it, and people taking profits, basically. So yeah, we'll see how it happens. Again, it could be a cup and handle, so you don't know what happens here. Or we can just start to retrace down here, and then it's not game over, but that's when we go down, right? So we have to wait and see how it reacts, you know, for the next quarter or two. So yeah, great stuff by JC there. Hedgehog traders, Canadian Ventures stocks, CDNX, excuse me, yes, are cheap, AF versus the US markets, the SPY. Positive divergence in play on the RSI. Did not make a new low price. Looking for a massive outperformance in these micro nano caps as capital returns and seeks value in gold, silver, lithium, uranium, and many others in the sector. Lovely words in my view. You can see here. This is 2-year long. We're in the squeeze here, and either this breaks out to the upside or you get a collapse and then you snap right back. That's often how I see these things. So very close to a big outperformance of the CDNX versus the SPY. Again, if the SPY starts to break down, as we looked at before on the previous two charts, then yeah, that's what's going to happen. The Happy Hawaiian, lovely name. Proceed, copper versus silver, you know, 15-year long trend line support here at around the 5 ratio level. And we're getting a bounce now. How high? We will see. But yeah, lovely stuff there for silver against the copper. Bob Lucas. Gold up strong today on a strong dollar move. That's good news for the metals. Should be able to see some follow through over the next weeks. You should expect. And this is from this is 2 days ago. So basically, getting a bounce here at these levels here, and also the dollar has been pretty damn strong the past week actually. So seeing gold doing quite well as well. That's good stuff for the gold. Again, the dollar is in a bearish wedge to the upside into heavy resistance again. It could break to the upside, but usually the bearish wedges they at some point drop down to the downside. So Sahara again, quite similar to the what's it called, the SPX, the SP 500, bearish wedge coming up here for the Nasdaq, breakdown here, and he has his levels coming all the way down here, depending on how low we go. But we are starting to roll over. You can see the moving averages starting to curl down here. So it looks like to me that we are in for a bigger correction for the Nasdaq. Sahara again, XLE oil energy. Let's go from that bear wedge. You can see here. Let's go from the bear wedge. You can see here the breakdown here for XLE. Again, it coincides with oil also struggling here. But it did regain. This is from 3 days ago, and the past 2 days, oil actually regained quite a bit. But still, we are dropping down here. The moving averages are coming up big time. and it should help it to stay in this range. We just need to pause here for like a quarter or two. That's my opinion. Oil, J Hinster. Again, you can see here the same trend line that I have had on for a long period of time. This one here, the test here, breakout, and now we're probably going for a retest at the 75s, give or take 75, plus minus whatever. I agree, oil is going a lot higher once we clear this one. J Hinster, Uranium Royalty Corp, UROY, again, squeezing here big time at this long-term trend line. Lovely, and then we bounce up here. This one has a lot of air. You can see here, a lot of air pockets that needs to be filled, you can say. So we will probably have a big move for UROY. Also, uranium broke out heavily last week. The URNM broke out of its 2 years long consolidation. Beautiful. Burak here, my good man, which will be on in like a quarter, 15 minutes, basically. Copper is off the green support and now flying. You can see here. Double rail support, the blue falling channel here, and then boom, breakout here. Again, if copper really, again, I want to see copper get above $4 and this double resistance rail right there. If it does that, we are going to see a lot higher prices for copper. Again, a lot more inflation coming into the system. Sahara, the silver miners, SilJ, so far, you can see here, beautiful charting. Let me just make it bigger for you. A lower support rail is coming across here, falling wedge in again into that lower rail, often very bullish. Same if we have a breakout, and start to flag down towards that breakout trend line. Very bullish very often. You don't want to see a breakout and then a snapback, because that's a lot of short-term momentum, meaning it's a possible fake out. But flagging down slowly, beautiful. Same here again. Looks nice, actually. Again, if gold and silver does what I think it will, if we can get the gold and silver ratio to break down, this will fly like you wouldn't believe it. It's a small sector, so yeah. Oh, did I just mess it up? Just let me go back here. Okay, there it is. Stefano, silver, SilJ update, quite similar again. You can see here he has, this is what is it? I can't see. Anyways, it doesn't matter, but you have the same here again, that we're going to go to the upside, which corresponds with the previous charting from Sahara. So I totally agree. I totally agree. What are we looking at? Is it silver? It is silver. No, never mind. I can't see what it is. My bad. Excuse me. Pass here again from Grady. Big inverted head and shoulders. The neckline is skewed to the upside, which I don't like to see. It's still valid to some degree, but I would like to have the neckline at horizontal or sloping down a tiny bit, maybe 10%, a 10-degree angle or something. Not too high, but still, it could go a bit more. But the upsloping, I don't know about that one, but still, it's perfectly valid here, the inverted head and shoulders. And if this is true, we are at 16. The neckline is at around roughly 40. So you have at least a move up to like the 60s on the nominal scale. This is log scale, so that's probably way higher. So great chart by Grady there. Grady again. You've seen this also from me. Big cup here, the squeeze, getting above, need to get above the 20s. The 18 to 20. The 20 is the final nail in the coffin that U.UN will start to, in my view, purchase uranium from the market, which is very, very thin. Again, the uranium market will absolutely blast if this follow through, and that will just drag up the URNM ETFs, the URAs, everything will go, in my view, ballistic. Not to hype anything, but that's how I see it. Grady again here, the spot versus the SPX. Again, this is beautiful, beautiful, beautiful. This structure right here, 1, 2, 3, 4, 5, breakout, retest, boom, resumption. Again, lovely, lovely outperformance by the spot against SPX. JC Parrots, the first thing we want to do is to identify the market environment we're in and then choose the tools and strategies that are best for that type of market. Many investors make the mistake of forcing their tools, strategies upon any type of market environment. So here he has the horizontal supply zones. You can see it right there. We have a zone here, and then we have this bad boy right here. And now we're coming down and we're bouncing off again. So what will happen here, we don't know. But if you can find these levels, sometimes it's a very clear level Sometimes you have a zone, like let's say in this case between, I don't know exactly, 4,200 to 4,350. Well, 4,300 to 4,350. So you have a zone, but if you can identify these zones or levels horizontally, then you've come a long way compared to others. Again, what will happen here? Many things can happen. We could form a head and shoulders if we just slightly roll over, or we can start to bottom out here over the next quarter or two, and then we can grind our way higher to attack the 4,600 again. Many things can happen, and yeah, very nice. That's all I had for today. My voice has been warmed up by this, so I'm ready to talk to Burak here in like half an hour. So yeah, I hope you enjoyed it. I know I did. As always, give me the comments below. What do you think? Do you agree with my take on the stuff that we have been going through here? Have a great day. See you in the next one. Bye, guys. Cheers.